It's time for our daily recap and trade dissection for Tuesday, February 18, 2025. I'm Sam Morton, and I trade the E-mini futures. You're looking at a daily chart of the SPY, and we see that they managed to get to a new high today and close right at the high. For the last few minutes of the open session, the bulls pushed price up about 15 points or so, but most of the day was spent around a zone that we identified early in the morning before the opening bell. You can see where the bulls were headed if we snap a trend line from these recent highs. They didn't quite get there. We'll go down to maybe a 5-minute chart and zoom out a little bit to show that they pretty much went sideways. This is pretty much Friday and today. And this is a pretty classic bullish behavior. They're going sideways for a while to build up enough steam to power higher, and they did that at the end of the day. They closed at new high. But they didn't quite get to that trend line, and that could be a place they could try to gap above tomorrow or something else, and that's what I want to talk about if we turn on the after hours or the extended trading hours. So this is the pre-market, and you can see that during most of the pre-market session, price was already around 612. They were fighting 612. The game plan that was sent out to subscribers this morning stated that if the SPY could open above like 611.50, 611.60 or so, that could be a good sign that the bulls could drive price higher at some point in the day. So they were looking good until right before the open. So they opened almost $1 lower from that area, and that kind of set the stage for like the initial weakness. If you look at the last minute push here at the end of the day right before the closing bell, it wasn't strong enough to get price up to where they were in the pre-market. It's kind of interesting. I don't know. There's something here that has the feeling of a fake out maybe. Like maybe we'll wake up tomorrow morning to a big gap lower or something. In the big picture, things do look bullish. So I'm just postulating here a bit. Basically, the sideways bullish consolidation starts to look a little off when you take into consideration the pre and the post-market data. But we'll know in the morning, won't we? And we can look over the levels and the game plan from the morning that was sent out at 8:11 a.m. You're welcome to read through this and pause the video if you need to. This is the rest of it at the bottom, just a screenshot of what the market looked like at that time in the day before the opening bell. And here we are with the whole day on the 1-minute chart, and you can see that price spent most of the time bouncing between the levels in the middle of the chart, and the zone proved to be pretty important. If you were playing by the rules, where were the trades? So after giving the market 15 minutes to settle in, price was coming down into this zone. There would have been no trades up here at this 610.78 level because all this happened before that 15-minute window opened. I don't typically adjust levels on a zone with that usual 5-cent buffer. A zone can be looked at as one big area or like a level that price could react from. So since we're treating this whole thing as a process, we'll consider the extremes of this zone as individual levels, simply just to bring consistency to the tracking log for these trades. So the takeaway is that you could have scaled in with E-mini contracts as price came down into this zone for a long position, but we're just going to look at these levels individually. Hope that makes sense. So point is no 5-cent buffer. And as a result, the trade here at 609.94, first time they came into it at 9:48 a.m., would not have been triggered. Price got within 2 pennies before bouncing. They came back a few minutes later, got within 1 penny and bounced again. So this kind of behavior is what I call a near miss. You would not have been pulled into the trade precisely at the level, so it's off the table for any additional long trades at that level per the rules. But when price came down into the lower part of the zone, 609.46, that was a viable place to go long, and that would have been official base hit number 1, at least 4 S&P points when they bounced. Price is back up to the top of the zone now, but we're not going short there for a recycle trade because we want to see more time go by before attempting a trade on the other side of a level. So all this bouncing around this zone would have generated no trades per the rules. So it wasn't until price got up to 610.78 the first time here, you would have gone short with ES contracts, and this is where the 5-cent adjustment comes into play. Without it, you would have missed this trade. They came within a few pennies. High was 610.74. That's 4 cents away, and pulled back. But we're going to adjust this and trigger the trade when the SPY hits 610.73. That's 5 cents below the original level from the morning, and there's your trade, a perfect short trade. 4 points at a minimum. From this point on, there would have been no trades for the rest of the day per the rules. The safe and conservative approach was to be satisfied with the trades that were provided at these levels and not attempt them again. The fact is, usually the more time a level is hit, the less chance it has of providing the right kind of reaction for a profitable base hit. Even down here at 2 p.m. or so, when price got below the zone, and then they came back up into the bottom of the zone here, would you have attempted a recycle trade by selling short at 609.46 or at around 2:25 p.m.? This level has not been traded on the short side, right? While that is true, you're not going to attempt a recycle trade on the short side here, according to the rules, because you need to see more time go by from when they get below the zone to when they come back up into it from the underside. So even if you had gone short here, they didn't react enough to hand over 4 full points, and you would have just scratched when they got back to your entry point. That's another rule, another near miss type of rule. The easy thing to do was just to avoid getting into this trade altogether because of the timing component was missing. So 2 official base hits if you were playing any of these levels by the rules. But I do want you to just look at the price action today and ask yourself what might have happened if you got into a futures trade each time the SPY hit a level and then pulled just 4 points each time. And if 4 points were not given, you would have jumped out at a wash when price got back to your break even. I mentioned this because I've done this before, and sometimes it works quite well. Today would have been one of those times, maybe 10 or more profitable trades, base hit trades, if you were willing to risk playing ping pong all day. It's been my experience, though, that if you stick to a strict process and just be happy to take less trades, trades end up being better in the long run because basically the trades are higher quality. I prefer quality over quantity. Anyway, interesting price action with the levels and the zone today. Do you think you could have made money if you had these levels to trade against? I think you probably could have done quite well for yourself. Here is a recording we can look at. After getting the daily levels and game plan emailed out, I got back in bed. I wasn't feeling well this morning. I set an alarm for 9:45 a.m. so I could get on a business call that was scheduled for 10 a.m. So while I did attempt to get into a short trade, I'll start playing this so you can see me put a limit order up here when they came back up into 610.73, but I quickly canceled that when they came up short. And so I was just pretty much on the call for 30 minutes or so. And after 10:30, I just let this recording run, tried to sleep off this crud that I picked up the other day. So no trades for me today. And you can see that by virtue of this recording for what it's worth. All the way to 4 o'clock. I'll just move ahead here to show you. Just let this run just so you can tell that I wasn't involved in any trades today. On the tracking log, the first one is the PBR, the playing by the rules log. You can read the notes and hopefully you understand how this works. This level here at 609.94, it's bold because it was hit, but it was not triggered because it was a near miss. But level 2 was a base hit, level 4 was a base hit in that order. So 8 points if you were playing by the rules. You could take a look at the other metrics and see where we're at this year so far. This is just January and February of 2025. And then my trades, nothing. Here's the levels that were hit, no trades taken. And once again, you can take a look at the metrics. Less trades tend to be better quality. Certainly nothing wrong with playing by the rules and getting a few more trades and having a pretty good rate of return so far this year. So that's a wrap for today. I hope you found some value and learned a few things. I know each of these daily recaps are pretty much the same, but together they start to tell a story. And if you're following along, you probably are starting to get some pretty good ideas of how this process works while not knowing every nuance of every single rule. That is reserved for the trading course, which has been done for quite a while now. But I'm waiting for someone to complete the back end. But I've been very happy to provide these levels to everyone who has asked for them because I want you to see for yourself that they work. And what better way to do that than to share every single trade that I take and show every theoretical trade if you're playing by the rules, and that's what we do here every day. So tomorrow morning, there will be new levels and a new game plan, and it will be sent out. If you want to get on that list and receive the levels, just head over to ticksandtrades.com. There's a little form there. Sign up, and I will add you to the list. I'll talk to you in the next recap video. Have a great day.